Hello everyone, this is Matthew Frailey with BreakpointTrades.com, bringing you advanced technical analysis since 2003 of the general markets, commodities, trade ideas, and of course mechanical systems like you see here. Anyway, it's Sunday evening, September 19th, and this is going to be a deep dive newsletter on the general market. So let's go ahead and get right to that. So here's the table of contents of this newsletter. Again, these newsletters, especially on the weekend, tend to be broad-based. We look at, what happened last week, news events. We look at the major indexes. We look at sectors, commodities, bonds, precious metals. And I'm actually going to look at a few trade ideas tonight. So let's go ahead and get started here. So this image here shows you index sector table, what transpired last week and on Friday. So far we've had a pullback in the market the last 2 weeks, which shouldn't be surprising to anyone. We've been talking about seasonality. Seasonality tends to be weak from especially around the mid-September timeframe to the first couple weeks in October. In fact, Sentiment Trader showed a study that if you bought and held the market only from September to October, over the last 125 years, you'd be down 75%. So the statistics tend to be weak this time of year, and so far that's been playing out. Now on Friday, we had a nice sell-off on the major indexes. The Russell was up a little bit though, and for the week, but so everything else was down. As far as the major market sectors, there's 21 of them here. And you can see on Friday, pretty good sell-off. Most of the sectors were down. For the week, there's some mix here. Most sectors were down, though, or more were up than were down. Again, we'll look at some of those when we get to them. The U.S. dollar had a good week. That didn't have a good effect on commodities for the week, or especially on Friday, which were all to the downside on Friday. For the week, we had quite a few commodities up, though. Some were down pretty nicely, like copper, gasoline we don't follow, coffee. Precious metals got nailed last week, though, especially the stocks. I'll go over that. Bonds, both high yield corporate and TLT were up for the week. Again, we'll look at all these charts coming up. Next. So here's the economic news for this week. Again, all eyes are going to be on this FOMC on Wednesday, guys. All right. Let's face it, the market over the years has been moving on all this easy money Fed liquidity, and if they give any hints of possible, tapering or even thinking about future tapering, that could definitely cause a little more selling. So, be aware of that. All right. Let's go ahead and jump to the charts, guys. So this first chart here is it's actually a quarterly chart of the 5 key major indexes. So each candlestick represents 1 quarter or 3 months. All right. So we don't often show this chart. And one thing interesting that stands out is this doji candlestick here. Again, we still haven't closed out September. Remember, the quarter ends in the end of the month of September. But if it closes like this would be a big warning. So in fact, a close below or a move below that doji, if it closes like this on a monthly, would be actually a pretty good sell signal. So we got to keep an eye on these. But clearly the markets have just had these amazing runs, from that February, March 2020 sell-off. I mean, especially look at the S&P, look at the Nasdaq, just running up these Bollinger Bands, right? So let me try to redraw that again. There we go. So we're just been riding up these Bollinger Bands, just crazy. Again, long term, guys, that is unsustainable. Okay. The markets ebb and flow. Okay. They go through periods of consolidation, trend. So, eventually this is going to have to end and we're going to have a long period of consolidation or hard price correction. So, if I was someone and all of a sudden I inherited a bunch of money or won the lottery, something like that, this is not the time I'd want to be deploying all that money 100% long to the markets. I would wait for one of these consolidation period timeframes. Next. So here's a weekly chart of the major indexes. So again, we've had essentially 2 down weeks in a row, which we're matching seasonality. We've actually had 3 down weeks on the Dow. All right. The Russell small caps IWM here has been going sideways here for about 7 months. Here's a daily view of the major indexes. So the Dow, as I've been showing, broke this uptrend line a week and a half ago, 2 weeks ago. It's been trending down. The S&P is flirting with breaking this trend line. This goes back to, late October, November of last year. So it's a long trend line. There's also a 50-day moving average right in here, which you don't see on this chart. Again, we'll look at the S&P and all these charts in more detail below. Here's the Nasdaq testing this trend line. Here's the Russell small caps. Huge, long, very long sideways consolidation. Whenever it does break out of this pattern, either to the upside or downside, it's going to be a pretty good move, I think. It's built up energy by the longer you go in a sideways pattern like that, the more energy you build. So this image, it's bigger than what my recording is, so I have to pan around here. So these are weekly charts. This is our KISS system. Trending system, the DVTs, think of it like a dynamic variable trigger stop. So the stops are constantly raised, and they've done a damn good job about keeping you in the trend this long term, since April 2020. So as price goes higher, the DVTs are raised, and they haven't been triggered on these weekly charts. Here's the S&P 4237. Now, me personally, a lot of times I don't use these. I use faster time frames. But, someone who, older person, retired person, they're long the indexes. They rarely want to make a change. These could be good guides, right? Let's move on. Make this image a little bit wider. So here's a monthly chart of the S&P, INX. That's the S&P symbol in the trade station. So each candlestick is 1 month. So again, we've had this just, fantastic move since, that February, March 2020 to here. Getting a bit stretched. One thing that we're really watching is this ribbon. So this is a moving average ribbon. You should all know what that is, technical analysis. These are EMAs, these 4 color ones here. Now this one here, the one that goes green to red, that's my custom BPTMA Deluxe. It changes with slope. So again, pretty simple guide, guys. Your moving average ribbon long term is bullishly configured. And it's these times when the BPTMA pinches into the ribbon, turns red. Those are your consolidation times when the market goes through corrections like you see here. But look how wide, look, it's obviously green, but look how wide and expanded and away it is from the ribbon. Look how wide the ribbon is, right? It's too wide. Eventually, this is unsustainable. Whenever you look at the past, you rarely see it like this. So eventually, this is going to need to go through some sort of consolidation period that's going to result in either a long time sideways move or a hard correction in price, or both. Eventually, this will need to be worked off. So longer term, this is what concerns me. We could see it eventually a consolidation lasting a year long, to work this off. So that's what concerns me longer term. And let's go ahead and move on. Here's a weekly. So let's move to the S&P charts here. We just looked at the monthly KISS chart. So here's the weekly view again. We've had a really nice move up back in from the March 2020. I hope some of you bought some things back then. That's been a hell of a run. The green lines here represent the higher lows. So those are good areas as well for, say, longer term stops, right? We still have that higher low here. We'll see if this correction ends up tagging that or not. We have obviously some MACD divergence that's been building longer term. Drew a trend line on the RSI a while back, breaking that a little bit. So we'll see, guys. We'll see what this correction leads us. Next. let's move to the daily chart. So here's a simple daily chart of the S&P, and the moving averages in red here are the 50 simple and exponential moving averages. Okay, and you can see all year in 2021, all the corrections have basically pulled into the 50-day moving averages. At most, they went 1 day below the 50-day moving average, like you see here, and then reversed, right? Reverse, down, reverse, reverse. Okay, and the last 4 times here, these have coincided with options expiration. So you had weakness into options expiration, and then rally strength afterwards to new highs. All right, Interestingly, last week we had options expiration, obviously weakness into it. We're testing the 50-day moving average now, slightly undercutting it. So, guys, is it going to behave, like last time? Is it going to just, go right back to new highs? Or is it going to be different? Okay. I personally think it's going to be a little different this time. So, we're right here. We're a little bit oversold short term. Also notice we did get a volume spike here. Interesting, we also had a volume spike back here in June, right at this bottom. So definitely possible we could try to bounce here. Another thing I could see us is going down, breaking the 50-day, then maybe coming up, forming a lower high, and then down again. That's kind of what I favor, but we'll see. So again, are we going to have lucky number 7? We've had 6 times we've recovered here and went new highs. I personally think this time is different, but remains to be seen. Let's move on. Here's another daily chart. The point values here represent your pullback high symmetry. So far, we've had about 118 points pullback from the highs. Previous one was 113. You can see back here was 181, 227, etc. So we'll see what it does coming Monday. Currently, by the way, futures are down this evening on ES, down about 11. So not a big down, but they are down. This chart here shows another daily chart of the S&P. You can see I got a couple moving average ribbons here, a longer one and a faster one. Been pointing out this divergence for a while. We have this potential long wedge pattern, right? And if you look here, it's hard to see because, again, this chart's big. The wedge here goes back to, say, September 2020. We did slightly break the wedge trend line here and back tested it and went down on Friday. So we'll see if we continue down lower. The wedge potentially measures all the way down here near the 200-day moving average. Again, if the wedge were to play out, I don't think the market is going to go straight down to the 200-day moving average. Like I said, I think it'd get oversold. Maybe some sort of wave A down, then you get a wave B up, lower high, then C down. But we'll see. Definitely something to be aware of here. Let's look at some of the KISS charts. Here's the daily KISS. So we're slightly undercut the ATR here. Again, we've been pointing out this moving average ribbon. Remember I showed you on the monthly chart? Well, this is on a daily chart with the BPTMA. You definitely had some different action here in the BPTMA. Went red 7 bars here. The previous corrections this year have been 4 bars. And so definitely a little more negative here than the previous pullbacks. Here's a 2-day KISS chart. DVT is a bit wider here at 43.48. The weekly ATR is down here. Here is the cycles time frames. Here's the daily. So this has been a pretty good guide. The A's, that represent your amateur buying, and you can see how they've occurred near highs. You had them back here, boom, pull back. Right here, correction. Here it was a little early. A lot of times these A's show up a little bit early to give you kind of an early warning. So that's definitely played out right at this ATR. We haven't really closed below it, but we're just trying to hang on. A positive is we have a little buy cycle there. You see the dots, kind of corresponds right with the ATR. Here's the half-day chart, 195-minute. So on all the lower time frames, take a look at the moving average ribbons, right? Let me draw that in. You know, you can see they all flipped to a bearish configuration earlier, and you know, you lost these ATR on the smaller time frames. All right, we talked about that early last week, and you can see that's been playing out. Okay, ATR is resistance. Look on the 60-minute how the rallies later in the week all stalled right at that ATR. Okay. Now we do have a little buy cycle in the 60-minute, but that's just a 60-minute. The half day, you can see it's right around the 50% area on the 60 stochastics. Moving back to the traditional charts, here's this. This is a 60-minute S&P. These horizontal lines represent the area where the NYSE tick indicator spikes above 1,000, and the thicker lines are when it goes over 1,500. So been pretty good guides. You can see over the last week, all these bounce attempts stalled right at this tick pivot, 44.85. Again, remember, these aren't exact. I wouldn't use these as exact levels, plus or minus 5 to 7 points, right? So these were all resistance. And this 44.85 was established here quite a while ago. I find these tick pivots tend to be important psychological support and resistance zones. Okay, so currently that acted as resistance, and we blew through these. And right now we're kind of in no man's land here. So if you look, we got, you know, a little area here to the next one, 44.15. If you look here, there's actually 3 lines here. So in the past, there was 3 tick pivots at 44.15. So this is a pretty good area, potential support. Potentially where we may bounce from. Again, these up here are now resistance, right? Now, if we lose this, you got a pretty good open air pocket to here before you get to another bunch of them, okay? Next, this chart shows you another 60-minute chart, traditional chart. So one thing we talked about was we could count an obvious 5 waves up back in early September. And along with some MACD divergence, you could see that end up playing out. And of course, we talked about negative seasonality. Well, the market has sold off since then. So that was a pretty good warning. You know, the bearish thing here is I can count 5 waves down here. 1, 2, 3, 4, 5, and then an A, B, C here. All right, which means that could lead to another extension move down. We'll see. You can see we got a support right here. Basically matches this high in late July. You can see how your moving average ribbon's a guide. It flipped bearishly, went bearishly stacked here. Then you see where it pinches right here. That's a low risk short on your when it first flips and then pinches. And then last week on the bounce, it pinched, and that's where it stalled. So we got a little support here. We have some positive divergence in the MACD. Could we rally here? We could. Or, you know, like I said, we could just extend lower. You could see on this anyway, we do have a pretty good open area to the next major support, 33.70. Now remember on the pivots, we have some right around that, trying to remember what it was, 44.15. But at least on this chart, you kind of have an air pocket here to here. So we'll see. I mean, you know, 43.70 could be targeted if we just start selling off hard early this week. Remember, we have the Fed on Wednesday. Next, here's a 15-minute chart. Let's go ahead and move on. And let's move to the Dow chart. So here's a weekly view of the Dow. So a couple weeks ago, I showed this rising wedge in the Dow, divergence. You can see the MACD divergence, RSI divergence. So this is the back of the wedge, was about 1,800 points. If you measure from the high here, it gives you a target initially right around 33,790. Okay, it's not an exact traditional wedge. Those tend to be 5 waves, but doesn't mean this won't play out. But definitely something to watch. Here's the daily. You know, this broke this uptrend line a couple weeks ago, and you know, 50-day moving average right here. You can see, essentially, we got kind of a, you know, really a no man's land air pocket. Let me redraw that. You really don't have a lot of support until you get down to this range. And by then, this 200-day moving average, which is upslowing, would maybe be caught up. So we'll see. Down in here could be eventual target. Here's the Nasdaq 100. So far, pulling back the last couple weeks. Obviously, it's been crazy strong uptrend from then. Here's the daily. That's your resistance here. Lost the 20-day moving average last week. You can see 370 is the big support, which I've been talking about. Now, below here, you don't really have much. You got sort of an air pocket all the way down to here. But that's your first big support. You can see the moving average ribbon is pinching there. Looking at the KISS charts, one thing to note here, you can see the DVTs. They've been a pretty good guide. We got a new DVT last week, 371.40. So that's a pretty tight stop if you wanted a tight stop on this area. Here's the various cycles. So very similar to the S&P. On the daily, you have the ATR there. You know, you can see on the 60-minute how we stalled at these ATR last week. Right? Little buy cycle there on the 60. Here's the traditional 60-minute chart. So I pointed out this rounded top a couple weeks ago, and this played out. Okay, this umbrella top. Perfect description there. It's the neckline. We busted down. Every rally attempt stalled at the trend line. One pro tip, guys: whenever you have a pattern, extend that trend line out, because even though you broke that trend line here, it's still valid. Okay, and you can see every rally attempt to stall at that trend line. Those were all good shorting opportunities, and you can see your moving average ribbon pinch there. You can see why that 370-ish area is big support down here. Still ways down. Here's the Russell weekly view. This was actually up for the week. This sucker's been going sideways here for 7 months. You can see the big breakout back here. That was a good buy opportunity. Took out a multi-year resistance. But now it's been consolidating for quite a long time. Here's the daily. Exhibited strength last week in the last couple days. Something interesting. But it's been a lot of chop, quite honestly. Finally, here's a 60-minute chart. Something to monitor. This trend line. Should it go down? Let's say it were to break down. There's an open gap here to monitor. It could be a target. Okay. So that does it for the indexes, guys. Again, we'll see what we do this week. Remember the FOMC on Wednesday, and futures currently are down tonight. Let's look at a few indicators. So here's the VIX. VIX closed up nicely on Friday. Oh, did not close outside its upper bands. Almost did. Remember, the upper bands are something we watch. We have a system for the VIX. So when the VIX Bollinger Band system, buy system, whenever the VIX closes outside its bands and then back inside, those give a good buy opportunities. Look at all these buy signals it gave you over the last year, year and a half, and they all were good trades. Okay, but those trigger whenever you close outside the upper bands and then back inside. All right, sometimes what we've been doing lately is closing outside the upper bands and then right back inside, so we stay outside the bands for like 1 day. All right, when you have larger corrections, you can break out of the bands and run for a bit. So the fact that the bands are flat here is easy. This makes it easy for the VIX to close outside the upper band. So I wouldn't be surprised if we saw that occur on Monday. All right. Now the question is it just going to stay outside the bands for a day, or will it run? We'll see. Here's a 60-minute view of the VIX. One thing we were showing last week was this falling wedge in the VIX. We showed that on Thursday, and lo and behold, that gave you a good sell signal for Friday, which played out. Here's the VXN. That's the VIX for the Nasdaq. You can see, you can see how it's been going sideways. It could easily close outside the bands if it wanted to, so something to watch. Next, here's the VVIX. What we follow is whenever it first closes above 110. That's the VOMA line. And let me draw that as a trend line. This occurred back here. That gave you an early warning sign for the market when this first crossed up above 110, right around here. So that gave you a great sell signal. Before this, gave you a signal. To me, it's not useful now. It won't be useful until it falls back below 110 and then goes back above 110. But that was a pretty good early warning back here, which we pointed out. This image shows you the breadth last Friday. And obviously the breadth was pretty weak, as you can imagine. Advanced decline, here's for the NYSE, was 2-to-1. Advancers, or decliners to advancers. Here's the Dow, 24 down, 6 were up. The S&P and the Nasdaq 100 very negative. The Russell obviously was a positive. You could see more advancers than decliners. The Russell was up that day. Now the Nasdaq itself was actually pretty decent, so pretty interesting. Let's go ahead and look at some market sectors. I'm not going to look at all of them tonight, but we'll look at a few. Here's the banks or financials. They had a little double top back here, pulling back, holding the 50-day. This is your major support. Now below here, you don't have any support until you get down to here. So far, still holding on to here. Here's the transports. They've been downtrending since May. They had this coil pattern recently, which broke to the downside. This sector has been very weak. Okay, that's your next support. XOK technology. Obviously this is an area to watch, big cap tech. This parallel channel, I drew this a couple weeks ago. You can see the 50-day moving average and uptrend line here. This is a big area, guys. So we're going to bounce off of here. Let me draw that in. So we're going to bounce off. We're going to go to new highs, or we're going to bounce off and maybe like a lower high and then break down. Or are we just going to bust down through it? Which in that case, then the broken trend line here would be resistance. It would be a potential short. It's a down. So keep an eye on this, guys. Next, biotech. Biotech, had that double bottom back here I talked about, was a good buy opportunity. Stalled here at the 200-day and that downtrend line. It did hold the moving averages here, which I talked about. In fact, if you're long biotech, I own a little bit of this. You could have a swing stop right here. Okay. I like to put my swing stops at higher lows, so essentially right there. We'll see if this can follow through or not. Okay. Here's industrials, been going sideways, but obviously quite weakening now. 200-day isn't really that far away. Kind of a big, this sideways movement over the last 4 months has allowed the moving average ribbons to flatten out, and that's a negative. Here's the consumer staples, got a recent coil busting down to the downside. Utilities, been downtrending quite strong lately. Healthcare had a double top back here, which I pointed out. It's trying to find a little support here, but still looks weak. Real estate hanging on to some ledge support here in the 50-day. Below here, your next support really isn't until you get down to here. Energy stalled at this trend line. Now, energy is interesting. Sort of has, you could almost argue it has a little inverse head and shoulder pattern here. Left shoulder, head, right shoulder, but it needs to take this neckline out. So we'll see if it can hold this area or not. Oil services, same deal. Here you could also draw a little wedge pattern, but this is your resistance to monitor. Let's look at some commodities. Crude oil busted through this trend line over a week ago. This is still very strong. Natural gas has been unbelievable. We show this coil back here back in May, and it just went parabolic. Finally pulling back here. Again, that was a little unsustainable. Here's the daily chart. Again, got very overbought here, guys. We talked about it. So pulling back to the 9 so far, 9 EMA. Here's a 60-minute chart of UNG, one of the ETFs. We showed this little uptrend parabola last week. It busted that. Copper, weekly view, down 4.6%. Big haircut there. Here's the daily view of copper. Again, downtrend line here. That matches the weekly downtrend line. Uranium ETF finally pulled back, guys. This is the weekly chart, down about 3%. This has been on fire again. You know, it was unsustainable. Finally needed a pullback. This was your buying opportunity on this correction in this bull market. I talked about this ad nauseum. I finally sold my uranium position last week. I will now look to buy it after a good correction. As, again, it's a bull market. I talked about the start of the bull market back here in December of last year when it broke this weekly long-term trend line. And I went aggressively long back here too. See, it says pull back in bull market. But again, crazy overbought here. Here's the daily chart. You know, you can see on the daily, basically undercut the 200-day moving average by a day, then recovered. Well, I guess 2 days. So you could have bought it here. You could have bought it on this trend line break. Hell of a move up. Now, let me talk, you know, some pro tips here, guys. You can see how wide the moving average ribbon got here. You can see some RSI divergence. I know some of you went long last Friday in here near the 9 EMA, but then it lost it. I personally stayed away because to me, moving average ribbon too wide. In my opinion, this is probably at least an A down. So let me go ahead and draw it in. This is going to more likely need a longer consolidation than like you had here. Okay, so maybe you get eventually a bounce up, lower high, and then another move down. So this initial move down, A, B, C. Then I would look to buy, you know, in there. But I have no interest really buying this unless it was just for a quick trade. All right, it's had too big of a run. To me, it's going to need a longer consolidation. All right. Let's move to bonds. Here's TLT. We withdrew this pattern as a bigger coil. We'll see how it reacts to the Fed this week. Let's look at the 10-year Treasury yield. A little rallying up here. Rates are trying to push up a bit. That's helping the dollar. Again, we'll see how this will likely respond to the FOMC comments. Here's the weekly view. We've had the MACD recycle back here. Moving average ribbon pinch in the weekly. Here's the J&K high yield corporate. If you want a positive for the market, this sucker is still holding up, still holding that 9 EMA. Markets tend to follow this. Keep an eye on this, guys. Now, if this starts busting down, that would, you know, that would justify the market pullback. But so far, it is holding up here. Let's move on. Look at the U.S. dollar. The dollar really does kind of have a bullish look here, doesn't it? We've been talking about that, and you can see the move up. This looks like a kind of an ascending triangle pattern, cup and handle, whatever. Man, I mean, you can see how the dollar could just, it looks bullish. It could just bust out of here. That doesn't bode well for a lot of commodities and precious metals. Here's the ETF for the dollar, UUP, similar pattern. Moving to precious metals, gold weekly view down 2.3%. Again, it's been in a series of lower highs, downtrend. This is the GDX GLD ratio. You want to see the stocks lead, and they've been lagging. Again, simple view. This is your major resistance. This is your major support. Here's the daily chart. Okay, you can see the ratio started turning down last week. We have resistance here. This has been big support this year, around this 1675-ish area, the little double bottom there. We had a quick spike here. Does it got to come all the way down here or not? We'll see. But boy, choppy mess. Here's silver weekly view. As you know, it's been in this range I've been talking about, from $30 to 22 for the last year and a half. Had a big coil. Look what happened. Busted the coil. Bounced, found resistance at the trend line of the coil, selling down again. Here's the daily chart, stalled right at that 50-day moving average, just declining 50-day, moving down again. You can see you got a support low down here, 22. Is that going to hold? Looking at the stocks, GDX, Gold Miners ETF, ugly, ugly. Testing another. This is obviously a big support. Resistance back here. Support. Turn support here. Support here. Here. Is it going to hold this time or is it going to bust? Here's the daily. Looking ugly. Here's the 60-minute. You had this uptrend channel that was lost, became resistance here. Kind of a head and shoulder look. That's been playing out. All right, guys, the final charts here. We're going to review some trade ideas. I'm not going to go through a ton. First off, here's Apple, or Crapple as I like to talk about it. So we had this as a long idea back here, this big coil. That obviously played out. I also had another coil here, which played out. But then Apple, you know, that epic lawsuit came out. It's been selling off since then. It's breaking a little trend line support here. Now, there is a support from the January highs back here. Watch that. But breaking that would set up Apple to at least sell off down to this 136-ish area, matching the April highs. And by then, this rising 200-day moving average will probably play catch-up. Watch Apple. We all know this is a major component of the stock of the market. I think it represents the largest percentage move of the indexes. So you have to watch Apple. Here's Microsoft, another big boy. Potential double top here. Let's look at some of our recent trade ideas. Qualcomm, we had this as a short last week, playing out quite nicely. Take some profits, my suggestion. Cover half. Lock in some profits, move your stop down so that you are guaranteed a profit. Chart number 69, NCMI, one of my long ideas. I pointed this out on Wednesday. I said on Thursday and on Friday morning, I said that it looked good. This had everything. You had a nice base here. You had good volume patterns. You see that? And you were forming this. You form this this higher low here within the pattern. I talked about that on Thursday. You could have went long, put a stop right there. Okay, no reason to put it down here. And then it busted on Friday, so I bought it on Friday actually, and then I put a stop here. Notice it tagged a declining 50-day. That was my initial target. I sold a bunch of shares there. I still own some, but I sold a bunch of shares there. Okay, and let's move on. Here's CGNT and a long idea put on Wednesday. Still looks okay. If you're long a little bit, maybe a stop right here at this low. You get a nice long rectangle pattern. I'd say it probably measures up here to the, I don't know, 31, 32 area. Chart number 70, this chart, APPS, was a long idea put out on Wednesday. Finally broke out on Friday. And again, so these bucked the trend on Friday. Think about it, guys. The market sell-off on Friday, these were nice. And CMI and APPS broke here on expanding volume. Same with this one. PAG was one I had on Monday's newsletter, or Wednesday's newsletter. Nice cup and handle. Broke out on Thursday. Big follow through on Friday. Keys was a coil pattern. Technically triggered on Thursday. You could see moved around on Friday. Volume was big. That could be options expiration. If you're long some of this, I'd probably put a stop right in here at this point. Friday's lows, something like that. I'm not going to review a bunch of other ideas or shorts since the market's a little bit oversold. Here's a few aggressive longs. Here's blue. I like this pattern. You got a really tight pattern. Nice volume. So, you know, breakout. You could buy it over this 1862 high. Put a stop right here. ADN, I like this pattern. It's been in a downtrend for a long time. It just took out a trend line here on expanding volume. Your moving average ribbon flipped. You can see it's been bearishly stacked all this time. Flipped to a bullish configuration. Pinched here. I would actually be interested in buying this on a pullback, light volume pullback. Or maybe a little bit over Friday's highs. Here's EPZM. Little clean resistance here. Maybe you just get a quick move to the 50-day. Again, this to me would be an aggressive setup if the market, especially if the market's weak. Remember, guys, these are counter trend with the market being how it is. Here's another potential long idea. Again, maybe just get a quick move up into here. RVMD, kind of bull flag pattern, starting to break here. Maybe over Friday's highs, get some follow through. Here's a low price stock. This support area, resistance up here, $1.70, cheapy. And here's the final one. I like the volume patterns on it. Something to monitor. Again, I don't see a lot of setups out there, quite honestly. These are aggressive setups. We'll see what happens on Friday. Let's take a look at futures here real quick. It's not the right chart. Okay, so there's a lot of charts on here, guys. But anyway, this is the ES futures, and currently down 20 points. So futures are negative. All right, guys, that'll do it. Enjoy, well, the rest of your Sunday, or good morning if you're viewing us on Monday. Take care.